In this video, we'll be going over IRS Form 8869, a qualified Subchapter S subsidiary election. So the purpose of this form is for a parent S corporation to treat one or more of its eligible subsidiaries as a qualified Subchapter S subsidiary, also known as a QSub. The QSub election results in a deemed liquidation of the subsidiary into the parent. And following the deemed liquidation, for federal tax purposes, the QSub is not treated as a separate corporation. Therefore, all of the subsidiaries, assets, liabilities, items of income, deduction, and credit are treated as if they belong to the parent. Because this is a deemed liquidation, you do not need to file Form 966, which is the corporate dissolution or liquidation form. However, a final return for the subsidiary may be required if it was a separate corporation prior to the deemed liquidation date. No final return is required if this election is being made pursuant to a reorganization under Section 368A1F and Revenue Ruling 2008-18. An eligible subsidiary is a domestic corporation whose stock is 100% owned by an S Corp and is not one of the following ineligible corporations. It cannot be a bank or a thrift institution that uses the reserve method of accounting for bad debts under Section 585. It cannot be an insurance company subject to tax under Subchapter L of the Internal Revenue Code, and it cannot be a domestic international sales corporation, also known as a DISC, or a former DISC. The parent S corporation can make this QSub election for an eligible corporation at any time during the tax year. However, the requested effective date generally cannot be more than either 12 months after the election is filed or 2 months and 15 days before the election is filed. So any election that is filed more than 12 months before the requested effective date will be made effective 12 months after the date of filing. And any election filed more than 2 months and 15 days after the requested effective date generally is late and will be made 2 months and 15 days before the date it is filed. There is an exception if the corporation can show that the failure to file on time was due to reasonable cause. In order to request relief for a late election, the corporation generally has to request a private letter ruling and pay a user fee in accordance with Revenue Procedure 2021-1. You'll file Form 8869 with the IRS Service Center where the subsidiary filed its most recent tax return. However, if the parent S corporation forms a subsidiary and makes a valid election effective upon formation, then you'll submit this to the IRS Service Center where the parent S corporation filed its most recent tax return. Once the QSub election is made, it remains in effect until it is terminated. If the election is ever terminated, the IRS consent generally is required for another QSub election with regard to the former QSub for any year before the 5th tax year after the 1st tax year in which the termination took effect. In other words, don't flip-flop on this because the IRS will make it a little bit more difficult for you to do so. There are only 2 parts to this tax form. It's fairly straightforward. We'll go through it step by step. So in part 1, we'll be walking through the parent S corporation that is choosing to make this election. And then in part 2, we'll be discussing the information for the subsidiary corporation. So in 1A, we'll just outline parent S corporation. All right, so we're entering the name of Acme Holdings and Acme Holdings employer ID number. For simplicity's sake, we'll just say that they use a normal calendar year as their tax year. And we'll just make up the IRS service center where this was filed. We'll just say that this was the Austin, Texas service center, since I believe that might be the service center for Florida, at least for some taxpayers. Name and title of the officer or legal representative, as well as their telephone number. So we'll just now in part 2, we're going to put down the information about the subsidiary. So we'll start with the name. And then they happen to be co-located with the parent organization, so this works out nicely. We'll put that they do have an employer identification number, and it was incorporated a couple of years ago. And it was incorporated in the state of Florida. So if today's date happens to be, we'll call it the 12th of May 2023, that means we cannot, we can post date this, so we can go back up to 2 months and 15 days, or we can go forward 12 months. So anytime within that time frame, we can declare that the subsidiary election is going to take effect. For simplicity's sake, we're going to say that this ends up taking effect at the end of the tax year. It's within our 12-month window, and it just makes it nice and clean for the accountants that'll be cleaning up our taxes. So, and then if the subsidiary previously filed an income tax return, we would enter that information. We'll say yes. We'll say that they filed with the Austin, Texas Service Center. The tax year ending date of the last year would be 2022, and we'll just say that they filed 1120S. So in box 14, the question is whether or not this election is being made in accordance with IRS Internal Revenue Code section 368A1F reorganization, where the subsidiary was an S corporation immediately before the election, and the newly formed holding company will be the subsidiary's parent. So there is some information in the form instructions. Basically, the instructions state that you should check yes if this election is being made pursuant to this reorganization. This occurs when a newly formed parent holding company holds the stock of the subsidiary that used to be an S corporation right before the transaction, and that the transaction otherwise qualifies as a reorganization. So you don't need to file separately a form 2553, the election by a small business corporation. You simply just need to be able to say whether or not the subsidiary is being basically subsumed into a newly formed holding company. So you can check yes, then you'll have to enter all of this information. In this case, we'll say yes for illustrative purposes, and then in line 15, was the subsidiary's last income tax return filed as part of a consolidated return? You can check yes or no. If you check yes, then you'll have to enter the information about the consolidated return, like the common parent, the employer identification number, and then the IRS service center where that consolidated return was filed. At the bottom, you simply have an officer of the parent corporation sign, put their title, and date the form. And remember, the form it can take place, or the election can take place up to 2 months and 15 days prior to the date on the form, or up to a year, 12 months after the date. So you do have some window of opportunity. And again, this isn't very common, but this is how you would take a parent S corporation and subsume one of its eligible subsidiaries as a QSub. That's all we have on this tax form. It's relatively straightforward. However, we've written a step-by-step tutorial article. You can find it on our website. If you go to teachmepersonalfinance.com, type in IRS Form 8869 in the search bar, and you should see our article appear. If you like our articles, please subscribe to our newsletter, and if you like our YouTube videos, please subscribe to our YouTube channel. If you have any questions, comments, or concerns, as always, please let me know in the comments section or send me an email. Thank you very much and have a great day.